All right, everybody, Economic Ninja here. We're going to be talking about something that's I think is pretty important, and it's something to watch out for. So I'm going to put it out right now. No editing, things like that. You know, no beginning, no end. Before I start, this has to do with China and literally what the headline's saying: Chinese massacre spreads to bonds, forex market amid rumors of foreign liquidations. Okay, so this is a big deal. Guys, if you haven't subscribed or you haven't hit the like button on this video, please do so. It really helps me out. If you've been watching this channel for a while and you haven't hit the subscribe, it would really help me out. Thank you so much. All right, here we go. It says right here, and I'm going to explain where this has to do with, what this has to do with other markets around the world. The rout in Chinese shares, which has demolished the country's tech giants following Beijing's regulatory crackdown on various sectors, extended into the bond and currency markets Tuesday amid unverified rumors swirled that U.S. funds are offloading China and Hong Kong assets. Okay, first off, I want to explain, these are rumors, okay? These aren't true facts. We won't know if they're facts until the next quarterly report comes out, okay? Of whatever company is supposedly doing this, or companies, okay? But you can't deny what's happening in the markets. It says right here, it says the speculation first reported by Bloomberg included talk that the U.S. may restrict investments in China and Hong Kong, circulated among traders late in the afternoon. Okay, so it says right here, the Hang Seng index started to fall. It said right here, while the offshore yuan slid to its weakest since April against the dollar, dropping as much as 0.6% to 6.52 per dollar. And 1 month fall, boy, I got a lot of yuan I got to sell, actually. I got to get rid of it. And it's funny, the things I think of. And the 1 month volatility in the currency pair posted the biggest jump since May. And it says even the Chinese bonds were dumped, with the yield on China's most actively traded 10-year government notes rising 7 basis points to 2.94%. Okay, I'm going to stop giving the numbers because you don't really care. This is what it affects. The facts are, there is sort of a market massacre right now, a bloodbath, if you will, in the Chinese markets, right? Both bonds and the forex. I don't know if the stocks have been hit really hard, but I'm only assuming they would because it looks like it's a total little meltdown, right? We don't know how big this is going to get, but if it gets bigger, this is what you need to expect. If the yuan is falling against the dollar, expect more manipulation in the markets where China tries to become dominant over the top of the U.S. Sorry, there's trucks driving by. It only leads to more currency wars, right? Now, because the country needs to be, it needs to be able to compete. One thing else that happens when markets like this go through this kind of experience is the money out of China that has been pumping up our economy. And I know it's hard to believe, but there's been a lot of Chinese money offloading in the U.S. to buy, you guessed it, real estate and other assets. And we're not talking about just residential. We're talking about all kinds of stuff. There's massive money coming in from China to buy up our land, all kinds of stuff. Well, that could slow down, right? Because if all of a sudden these billionaires and companies all of a sudden are seeing massive losses in their books, that's that much less money that they have to go and put in other places, because they still have to maintain business where they are. So I want to explain that really clearly, that you need to be watching these other countries as they start to melt down. You know, most people don't remember. I want to say it was in 2004, Germany went through an absolute bloodbath where their economy cratered. Totally cratered. You know, everybody believes that Germany was the strongest when the EU had all of its issues with Greece. Back in, I'm guessing here, 2012, 2013, maybe 2014. But people don't remember that Germany was actually imploding in 2003, 2004, right? And it was because they changed their fiscal or monetary policy to become all of a sudden the strongest in the EU. So what I want you to watch is these countries, as they start popping off and having bloodbaths, there becomes issues, cross-border issues with whoever they're doing business with, okay? So we don't know how big this is gonna get, but I'm gonna put this out here right now just for you to start thinking about. Something that you guys can follow. I'm getting a lot of great comments from my followers and subscribers that they're watching this stuff, and then they send me a link in the comments below or things like that. It really helps me out. I really wanna start watching this story because, you know, this could be a little bit more than not a hit piece, but clickbait, essentially. So, all right, guys, with that being said, I thank you so much. The Economic Ninja is out.